Hi, my name is Alan Bush, and I am the Senior Financial Futures Analyst with Archer Daniels Services. Let's start out with stock index futures. What's happening today is basically we're starting to see this market ignoring bearish news, which basically is a sign of strength. We did have a lot of negative economic news overnight coming out of China and also out of Europe, especially in Germany. And yet stock index futures trading higher this morning. And what appears to be happening is there's a growing belief that the Fed or possibly the European Central Bank is about to embark on some additional accommodation. That is the rumor that we are hearing. Some talk that the ECB could potentially cut their base lending rate by 25 basis points. There's even some talk that the People's Bank of China may be ramping up their accommodation. So that is the dominant theme this morning in all of the financial markets, prospects of easier credit from some of the world's major central banks. So with that in mind, I think stock index futures will probably perform well today and over the near term, in spite of all these negative numbers that we had. Over in the currencies, we had the euro currency dropping to a new low, basically trading at its lowest level since July of 2010. But some of that reversed now with prospects of easier credit from the Fed. Of course, that would be a bit friendly for the euro currency from an interest rate differential point of view. This is only a temporary situation as far as any accommodation from the Fed as far as its impact on the euro currency. The main trend is still lower, and I would expect additional pressure longer term in the euro currency. The Australian dollar and the Canadian a bit better for the same reason. Prospects of more accommodation theoretically could stimulate the global economy. I think this will only support those currencies temporarily. The main trend on the Australian dollar and the Canadian is still lower. Both remain below parity to the dollar, and I think that will continue. And credit markets, seeing treasuries a little bit lower on the belief that any improvement in the global economy could support some of these commodity markets. Of course, that would be a bit bearish on credit markets. Longer term, though, we feel that the main trend on the credit markets is higher, and that from here, even though treasuries are lower, I would expect to move back to near unchanged on the day. So once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.